Meantime, we got some news on OpenAI this morning. Kate Rooney's on the West Coast, and she's got more on a fascinating sale, potentially, for employees of OpenAI of some of their shares.
Yeah, Andrew, good morning. Good to see you. So sources telling me OpenAI is going to be selling a new $1.5 billion stake to SoftBank. This is going to be through a tender offer where current and former employees are going to be able to sell their shares. Masayoshi Son's firm, SoftBank, first invested roughly $500 million into OpenAI back in October during that mega funding round. This is all going to be through its Vision Fund 2. A source tells me Masa was persistent, as they described it, and looking for another opportunity to put cash into the startup. It raises SoftBank's total stake at this point to about $2 billion in OpenAI. Across all of its funds, SoftBank, for context, has roughly $160 billion in assets, has also made a couple other notable AI investments. You've got ARM, for example, and at a conference recently, he said he is saving tens of billions to make the next big move in AI. So OpenAI and SoftBank did decline to comment on this one. It is a way, though, as well, for current and former employees to get cash. They're going to need to have held those restricted stock units or RSUs for at least 2 years. This is increasingly important, especially in tech amid this IPO drought. I reported yesterday that Databricks is in the midst of a similar move, raising between $5 and $8 billion to get employees some liquidity. But for OpenAI, it also is a signal to potential employees that even if OpenAI does not go public anytime soon, there are ways to capitalize on its meteoric rise in value. One person telling me the startup is in a war for talent at this point and expects to do more secondaries going forward. It's going to need to tap private markets, as this person told me, again, in the not-too-distant future. OpenAI was last valued at $157 billion. I'm told this week's deal not going to change that valuation. Source also tells me this is not related to its potential plans to restructure to a for-profit business. I'm told that is still in the works, guys, so stay tuned. Back over to you.
Kate, one of the things that Becky and I were talking about was just the incentive issue, which is, how many of these folks are going to be selling out and staying at the company? Is that a good idea, a bad idea in terms of incenting them economically? There were some early folks who were in OpenAI when it was effectively a research outfit before they'd even productized any of this, many of whom have left, but they did have shares. Will they be able to sell into this? Do we know?
So former employees will be able to sell, I'm told, as well. And that's a big part of this. You have a lot of founders, a lot of early employees that have left the company at this point. If their shares have vested over the past 2 years, they are going to be able to sell. But I'm told it's also sort of a recruiting tool. If you go to look at, hey, am I going to go to Meta where I can get stock and potentially sell out sooner, or I'm going to go to a private company where I'm worth a lot of money on paper, but I might not be able to pay my mortgage or send my kids to college. They want to signal in this case that, yes, you're going to be able to have these frequent liquidity events where you can get cash. It does beg the question, though, of when you'd want to sell out. You wouldn't want to sell too early if you're an employee and you believe in the 10, 20-year horizon of a company like this. So the incentives depends on who you are, but it's probably a sigh of relief for certain early employees that would have been locked up until this point.